Gold will continue to appear to rise, but actually what's happening is that its fiat currency is falling. But there is another element to this now, and that is that I think the understanding of this is going to widen, and particularly amongst Chinese savers. It is the number one fiat currency. And if you're going to get out of the dollar, you've got to get out of fiat currencies full stop, and you've got to go into gold. And this is the conclusion that central banks around the world have woken up to.
In today's news recap, silver's bullish break under threat with aggressive sellers parked above. Silver teetering above support zone. It could be an important day for silver, threatening to break the uptrend that kicked off the bullish run back in February. Given its importance, it comes across as an ideal level to build a trade around, regardless of how the price action evolves from here. For now, you can see silver is resting on uptrend support, having pushed below it earlier today. The reversal possibly reflecting the proximity of the 50-day moving average, which acted as support earlier in June. Sell the break should the price break and close below the uptrend, and 50-day moving average, you could sell with stop loss above the trend line for protection, or buy the bounce. Should uptrend support hold, you could buy with a stop loss below either the uptrend or 50-day moving average, depending on your risk tolerance and trade target. The first upside target would be the top of the bull flag, currently found at $30.50. If that were to give way, $38.57, 31,548, and May highs above $30.50 would be the next levels to watch. Key event risk looms. As for key drivers in the days ahead, it's hard to go past the U.S. core PCE deflator on Friday, given the implications for the Fed rate outlook and U.S. dollar. From a fundamental perspective, silver and other non-interest-bearing assets would normally benefit from a weaker greenback and lower U.S. borrowing costs, creating tailwinds from a FX perspective and reducing the opportunity cost of holding long silver positions. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
Continue with a bullish view on the economy, or on stocks, on bonds, whatever, on the dollar, you could suddenly find that the whole thing gets undermined very, very quickly. And for those who, like us, understand that gold is actually the only way out of this credit risk, then to sit in your hands and sort of say, well, I think it might come back a little bit. Well, it may well do. But I think you won't forgive yourself if these events start to come through quite rapidly and you haven't bought. So that I think is roughly where we are. There's a lot of risk out there, and that's not even the economic risk. I mean, the economic risk is still there, as we've just discussed. And on top of that, everybody expects interest rates to fall. If they do fall, they'll be manipulated down, because when you get a contraction of credit, which is actually what's happening with the over-leveraged banking system, then the cost of credit, interest rates, rises, actually. So, and also you've got the US economy or the US government rather, is definitely in a debt trap. So you are going to see higher bond yields along the yield curve. And so the Fed actually isn't in control of interest rates any more than anyone else is. And I think another thing which we should know is that the only funding now that I think the Fed is doing is really as a result of the carry trade out of the yen. I mean, the money funds and the banks, I think, have put their liquidity into T-bills. And now it's up to hedge funds and others, to short the yen, take the proceeds and go and buy US treasuries with it. Because for the yield pickup, I mean, and you see the yen fall and all the rest of it. So that is vulnerable to a sudden bear squeeze, if you like, on these guys in the yen, which could come out of nowhere. I know it seems unlikely, but there are all these dangers. So I think these summer months, where in this country we sort of forget about stock markets, we go to Wimbledon instead. People's Bank of China. Read all the headlines. The People's Bank of China has been buying gold. That's actually got it completely the wrong way around. What the People's Bank of China has been doing is selling dollars. And the distinction is terribly important, Kai. Understand that it's a distinction, and you'll understand actually what's happening. Because what the the People's Bank of China is in effect saying is we think the purchasing power of dollars in our reserves is going down. Now, there are various reasons why that might be the case, but it is the purchasing power of the dollar falling, not the price of gold rising. And this is where everybody gets gold wrong, and particularly the establishment, if I could, the bullion banks in London, the swaps on COMEX, all these guys, their only experience has been in a fiat currency environment since particularly the mid-1980s, when everything was financialized with Big Bang in London and so on and so forth. So what they're doing is they're trading something, they account in dollars or they account in euros or pounds or whatever. So their comparison is profits and losses measured in the fiat currencies. But actually in monetary terms, because gold is legal money without counterparty risk everywhere, and euro and mine currency are not counterparty risk free, and they're not used everywhere, you can see where the risk is. The risk is in the fiat currencies. So, on that basis, what we're seeing with People's Bank of China and also all the other central banks who are doing exactly the same thing is they're sending a very clear signal that they're seeing the purchasing power of fiat currencies declining.
The global economy is experiencing significant stagnation, with major economies running unproductive budget deficits that obscure underlying issues. Alasdair Macleod, head of research at Goldmoney, notes that this rolling recession is not reflected in official statistics, particularly in the United States. Consumers are tightening their belts, evidenced by reduced dining out and lower gas prices. This economic stress highlights a disconnect between headline figures and on-the-ground realities. Currency dynamics play a crucial role in this precarious landscape. The shortening duration of U.S. government debt is leading to a funding crisis, with foreign demand, particularly from Japan, significantly influencing U.S. Treasury yields. Reluctant rate hikes by the Bank of Japan are also impacting global financial dynamics, indicating a broader, more interconnected financial stress. Gold's rising prices reflect the declining purchasing power of the dollar, with China's strategic accumulation of the precious metal underscoring its divergence from Keynesian economic policies. As Chinese investment shifts from real estate to gold, this trend indicates deeper structural changes within the economy. The discussion on central bank digital currencies reveals varying approaches to financial control, with the Bank of England's proposal contrasting with more centralized models. The impending launch of CBDC platforms by SWIFT could further reshape global financial systems, adding to the complexity of the current economic environment. Now let's continue with the episode. Make sure you subscribe and share this video with a gold bug, as more people need to know.
And again, talking purely in charting terms, it's the start of a new bull phase. So that's where we are. I think what we've seen sort of part one of the new bull phase. That was a run up to 24.45 or whatever it got to. We're now consolidating that, and we've been consolidating that for the last 2 months or so, 2 or 3 months. And at some stage, that consolidation will end and off we go. But as I say, what it's actually about is the declining purchasing power of the dollar, which, we're talking about when we look at the gold price, or, if you like, the dollar priced in gold. That's going to continue to decline. I mean, what gives the dollar its value? I mean, we're talking about bits of paper or units on in some sort of electronic account. It's just faith in it. It's just faith. That's all it is. What gives gold its value? Well, you can actually hold it, and it's legal money. This is the point. I remember when we were, when you very kindly invited me to talk in Frankfurt, I made this point to the invited audience, and I don't think people understand this point enough. So gold will continue to appear to rise, but actually what's happening is that its fiat currency is falling. But there is another element to this now, and that is that I think the understanding of this is going to widen, and particularly amongst Chinese savers. The point is that the Chinese, as a nation, are a saving nation. It's estimated that Chinese households save 35% of their income. Now, 35% of their income is around about $6 trillion on Chinese GDP. So $6 trillion, where does it go? Property, yesterday's story. Stock market, not really. It goes into bank accounts and it goes into gold. And I think it's increasingly going to go into gold and also silver, because Chinese individuals can't go and buy foreign currencies or foreign stocks or anything like that. They don't have these avenues which we have become accustomed to. Whether the avenues are good or bad, it's a secondary question. But as far as the Chinese individuals are concerned, their banks will offer them the facility to deposit money, currency, yuan, in yuan accounts, or alternatively in gold accounts. And as long as you've got a minimum of about 500 or 600 yuan, which is what, about $80 or something, you can open a gold account and you can accumulate your savings into that. What does the bank do? Well, the bank has to go out and cover these liabilities. Now, it might do it on a fractional reserve basis, I don't know, but I doubt very much that that's going to be the case. I think they will try and back it with physical bullion as much as possible. Of course, we don't see this necessarily because the accumulation of gold reserves, say at any of the major Chinese banks, will be in the Shanghai Gold Exchange vaults. So this isn't going to be delivered to the public, which incidentally has already delivered something like 27,000 tons of gold into the public. So, this is gold. This is why gold is moving. The pricing of gold has actually moved to Shanghai.
What do you think of today's episode? Is Alasdair Macleod spot on, or as John from our community would say, is just all is air? Post in the comment section down below your honest opinion. Share your insights on the current situation for gold and silver. Send a super thanks if you find our recaps valuable. And watch this video right here because you'll love it. I see you on the other side.